got this. Right. So information that I always look at first is information to the left. To the left side there, you notice that the market was coming down there. That was an extreme lower high. It dropped, created a swing lower low, went on, failed to break the swing high there, went again, failed to break the swing. Then now it's on its way down. That's a simple bias or a simple market structure movement of what happened just from the left there. Right. So that swing high failing to break multiple times like that, that was actually an opportunity here. These are opportunities where actually those are what we call sniper entries. That one is the same way with those ones. Those were opportunities to enter sniper entries there because that was a swing high there. So if the market comes to a swing high, fails to break it, gives a rejection, that will be opportunity for entry. Obviously, you wait for confirmations on your lower time frame before jumping in, but those are opportunities for swing entries. Then here at the bottom, I have this swing low. That is still my swing low there. This level here is still my swing low, which is my lower low there. So I'm simply saying this is my previous swing high like this, swing lower high there, swing lower low there, went back, created the same high, failed to break there. So overall, external is still on a major bearish order flow market, right? But here at the bottom near this, you can also see that there is a demand that is there. There is a demand that is there that was actually tapped. It tapped into that demand, tapped here on that demand, right? So far, most of this is almost all the information that I can gather from the daily. I can also include a lot of other things. So if ever we get, how do we now know that it's now time for the market to fully go up? The first level that step index must break if ever we're going to go up is this previous internal lower high there. Because according to internal structure, this is the one here, whereby where the high, we broke here, lower high, we broke here, lower high there, we broke again. So the first level, can you please mute your mics, everyone? Mute your mics, please. So the first level that it has to come and break, if ever it's going to go up, is this one, right? So if ever it's going to also go up, so here in this case, it can even come because this internal order flow, sub-internal order flow, it's still bearish. It hasn't shifted. This one, let me mark proper structure for you so that you see that it has been bearish ever since the top there. It has been bearish. It has been bearish. It has been bearish. Let me mark. Right. So let me just accept these people here. My God, what's this now? Let me accept this one.
Thank you for calling Amazon customer service. My name is Dominic. I have your name, please. Hi, Crab. How are you today? All good. How can I assist you today?
How many of you here trade step index? Let me just see the trade step index here. Almost everyone is trading. I also like those two. Wonderful. Almost everyone here is trading step index. I see. Let me admit all these people. Right. So let me continue. Hey, who is typing my screen there? Please don't draw my screen. I don't know. Where do I remove this? Whoever is typing my screen, they stop it. You can see, let me. Let me disable. Okay, right. So I think I fixed it now. Fine. Okay, right. So, right, wonderful. So, as I was saying, step index, all the zones that I'm going to be marking here, those are the. Can you please mute your mics? How do I mute everyone here? How do I mute everyone? Can you please mute your mics, guys? Mute your mics. So let me proceed now. I was saying step index. I showed you that this to the left was our swing lower high. Our swing lower low was this. That was the same high there, same high there. So from the top there, you would have actually caught beautiful swing trades from the top. Because remember, the external order flow was still what? Was still bearish. You could have actually caught nice sells from the top there. Nice swing sells from the top here and here. You could have caught nice swing. So internal order flow now, it also shifted to be bearish. Where did it shift to be bearish here? This was the change of character down. That was the change of character of internal order flow. Right, let me put this in an arrow there. Right, that was a change of character of that internal. Remember, internal order flow, it was going up, it was bullish. But now, after it breaks there, it's now bearish like that, right? Remember, Mike, there's no audio. Guys, can you hear me? What is this one saying?
Yes, we can hear you.
Mr. Eddleston, please trade and make money and buy a new device.
Yeah, we can hear you.
Okay, so that was the change of character there. This one, so those ones were the initial trades that you could have entered. This change of character, you could have targeted this change of character here. This one, the reason there was no change of character to the left here, the leg was this one. Then this one, the leg is this one. So that was the change of character. You could have also entered beautiful sells on this supply here that the market came back onto. You could have entered beautiful sells from there. This supply zone here, you would have entered beautiful sells from there as well. So going all the way down, you realize that it went on and on and on and on, maintaining that bearish order flow. This is still bearish order flow being maintained. So from there, that's why I always tell people that if you want to really make good money out of the market, know your zones. When you know your zones, for example, selling from there, that's a huge trade that you would have held all the way to this leg here. People, when you tell them to hold, sometimes they don't like holding because most of them, they don't really understand that the real money there is made over days and over weeks, more than just in few hours. So that move happened all the way like this. This is internal order flow according to the daily. Whatever was happening inside here, that's what we call sub-internal structure. You could have gotten also other confirmations of entries inside there, but this was the main zone, was from there to there. After it broke there, then it gave a slight pull back up, pulled back into this. You would have also got some sells there, went on to break structure down there. So meaning you entering from there, your target was this one. So like this. So now this is our current lookout now. This is what is currently there right now on step index. Let me put this. That law is also bound to be tested. If ever this market wants to go up, it can actually also push all the way down there. It can also push all the way down there into that swing lower low there nicely, right? So the reason why I always tell you trend lines alone, trend lines, they're just a shallow way of looking at the market. People, when you say that, some people they start to get angry, they start to, but that's the truth. Look at this trend line. You would have drawn this trend line, breakout, check what happened, came back inside, came back inside. So all of this, you can actually see that it's not, it wasn't even that accurate, the trend line on its own. So if you don't understand structure and you're simply using trend lines alone, if you don't understand structure and you're simply using trend lines alone, you're at a danger, a very high risk of being manipulated like the rest of the guys, right? People, they think someone someone texted me a very funny text asking me, my brother, do you even know how to use trend line? I said, definitely. Definitely. I even know how to use trend lines more than most of you who are using trend lines only. It's not, I know their weakness. I know their weakness. That's why you might not see 1,000 trend lines here on my chart. I can draw them for you, not for me. Me, I might not need them, right? I might not need trend lines. So here at the bottom, I can also draw a trend line. Let's see, this one, you can draw it like that. Or you can actually find a better way to draw it. You can draw it like that. Let's see the top. So someone might think that I don't know trend. No, come on. I know these trend lines. I know these channels, whatever you guys call it, whatever. We know all of these things, but I'm simply saying, you knowing this alone, it's not good enough. It's not good enough. It's not good enough. So you can draw it like that, or you can simply focus on where the market is currently, like starting from there, coming all the way down like this, something like this. So when you draw something like this, you know that the next time that it will be coming, that can be your resistance there. So this one, I might not need it because I have a support at the bottom there. So if we get any confirmations, whether from where it is or from here for buys, it means you trend line guys, you can even target this as your first target, right? Then we can also see that if ever it's going to continue going down, it has to come to this extreme supply, because that one, it would have collected this inducement liquidity. So some of us now who don't really look at that, who can even hold as far as that level there. So that is if ever it wants to continue going down, it will give us something like that. That's why I said this one, this previous low high, this previous lower low, this lower high there, that's uh, our current range of focus, that level and that level where the market is right now. So after you've exhausted most of the information, like on the daily like this, I go down to a very strange time frame that most of you, I've never heard you guys mentioning about that time frame, but it's actually a time frame that can actually help you to see the market better. The 8-hour time frame, it's actually a very good it's a very good time frame. Trust me, a very good time frame. It gives you so clear zones. So yeah, let me show you what happened. You could have actually entered a very beautiful sell from there. Why here? If this is according to the 8-hour, this low and that high there, those are the external levels. Then this one, whatever is happening, that's the internal structure, right? So this is the external, this is the internal, right? So if you notice the internal, this was the previous high of the internal, right? That was the high there. Where is the low? The low is this one. Whatever happens in between a high and a low, whatever happens in between a high and a low, whatever happens in between a high, major high and a major low is what you call, remember, I say this one is the internal structure, this one and this one. So whatever was happening in between there is what you call sub-internal structure. So you'll notice here, notice what happened. After creating that high, it dropped all the way, created this low, came back the first time, didn't reach there, came back here, didn't reach here. So already here you can see so many equal highs. That's a form of liquidity. Here you can see so many equal lows. That's liquidity. Even if you are a trend line trader, if you don't know where liquidity is on the market, if you can't identify and spot where liquidity is, you also be part of the liquidity, right? Even if you only know support and resistance, if you can't identify where liquidity is on the market, we can't run away from that fact. There are people who say, me, I don't trade SMC, whatever, whatever. No, it's not about trading SMC or not trading SMC. No, it's all about you knowing the correct structure of the market. Once you know the correct structure of the market, know where liquidity is, know where liquidity is not. So you see how beautiful that this was a very beautiful sniper entry. The signal, unfortunately, it wasn't just given, but that was a beautiful sniper sell from there. Touched, dropped after collecting liquidity. Entries after collecting liquidity, they usually go very, very, very aggressive. After it collects liquidity, taps into a zone, you find the market moving in one zone or one direction for a very, 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 very long time. Right. So on the 8 hour, I've taken some details there. So this is the 4 hour. That was our high. That was our low. So here, according to the 4 hour, you realize that they came and actually tapped this, right? But in as much as they tapped that on the 4 hour, that demand there, right? You realize that there's also a form of liquidity that is still here, in between here. Those equal lows there. This is liquidity. These guys, they know that so long they generate that liquidity, they will always come back to collect it. So if ever step index is going to, if ever they're going to push step index up, they'll come and collect out this liquidity. They'll come and take it out because this was an internal change of character, right? You can see the internal here change of character which happened here, right? After that happened, this is the low of that change of character. Where is the high? The high is the current one, that one at the top there, right? So already we have our low and our high. So if ever is going to buy, it mustn't come and break this low. If ever step index is going to buy, so that's where you can even see it coming all the way here, bouncing there, then shooting up, right? That's just one of the possible scenarios according to what I will be seeing here on the 4 hour, right? So that sell, you could have caught it just like there. So now it coming down as well. That's where now the power of information now comes in. Let me show you now what I also saw again. So it going up like this, you realize that it went up in form of bullish order flow. High, low, high, low, there, high, low, high. Where did it break? It broke that order flow where? It broke that order flow exactly here. So the same thing that happened here is the same thing that you can see here. Broke, came back, went. Broke, came back, went. So it's also almost a similar thing that I'm anticipating to first happen maybe before it comes down. It's also a scenario that I'm anticipating to happen before the market drops all the way down. So now on the 4 hour, I think I now have all the information and the details that I need. That one you would have caught it. Let's go to the 1 hour. So these main time frames, 30 minutes, 15 minutes, 5 minutes, whatever, 1 minute, those I use them as entry timeframes, not analysis timeframes. 30 minute, 15 minute, 15 minute, 30 minute, 5 minute, whatever you call it. Those ones I use them as analysis timeframes, I use them as entry timeframes, not analysis timeframes, because they have a lot of noise that you might not even see the major zones there. You might not be able to spot clearly the major zones. So here, after this change of character, remember now what I've been telling you all this while, that there are two kinds of entries. There are what we call the initial entries are the liquidity generating entries. You would have called them by this break and retest here. It actually retested here to the trend line as well as the demand. You would have caught these buys. Catching these buys, you would have targeted these previous highs to the left as your TP targets, right? Those are the initial trades. The second set of trades are what we call the liquidity collecting entries. Liquidity collecting entries are the entries that will happen after all this liquidity. This inducement has been collected. Remember, they left a zone here on the 1 hour. After they left us this zone, they created there's this liquidity, there's that liquidity. So they are bound to come back and collect all of that liquidity before they continue. That will be the next set of entries. That will be the next set of entries there. So we're anticipating them here on this yellow zone there. That's we're anticipating the next set of buys basically on step index. But now looking at this, where the market is currently, remember I told you that as it was going up, it was giving this bullish order flow type pattern, higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher high, higher low. So now we broke now, which was never happening all this while, right? Which was never happening all this while. Meaning now, it now means after this break, it now means that the market has done what it wasn't doing. They left out the same thing that I'm expecting to happen to the downside is the same thing that I want to see happening on the upside. Where is it going to happen on the upside? Same thing here on the upside. I remember around the AMs today, I even took a sell there. I didn't want to give the signal because when you're sleeping, then you want to give a signal like that. So it was this because I know this is what we call the initial. Those are the initial entries. In this case, those are the initial entries. You could have caught the sales from there or this one. Those are the initial entries or what we call the inducement entries. So those inducement entries, you can actually take those trades. Hear me? You could have taken this sell, your stop loss just above here. You know that they are going to leave out this inducement and leave out this zone untapped. What they are doing there, once they manage to come and change character there, they will come back, take out this inducement, then they continue going down. So where am I expecting from right now, from even where it is right now? Once you get, obviously that will be a counter trade now because you're counter trading, you're opposing the current order flow. This order flow is now bearish. Remember, it was bullish here, now it's now bearish here. So it bearish like that. I'm anticipating a huge sell from there. That will be a sell after they have collected this inducement. From there, you'll be targeting where? I'll be targeting that bottom where I'm anticipating to start buying all the way there, right? That will be the first major trade. Then from there, we are anticipating buys, as I've said. So currently where it is now, once you go to 15 minutes, 30 minutes, and get lower time frame confirmation or lower time frame shift in order flow, you can actually get some beautiful reversal buys to the upside, right? Those reversal buys, they'll be opposing order flow. In as much as they will be opposing the order flow, that's why I always talk about applying risk management appropriately, depending on the current opportunity at hand. So this is also a current buy. The reason why it might actually buy from there is because this demand here, inducement has been collected there. A lot of liquidity has been collected. This liquidity, that inducement, it has collected everything. So that is where it can actually start to bounce, come there, then drop. So for those wanting opportunities right now, just wait for confirmations on 15 minutes. Let me go to 15. Let's see. Once we get that clean confirmations there, you can actually enter the reversal trade going up, right? This is just for formation. This is just for formality, but I don't use these things. According to this now, what do I want to see? According to this, I want to see this internal. This is the internal previous lower high there. So in order for me to take any buys on step index, I must see something like that being broken. That is what I'm calling in shifting internal order flow. If it doesn't shift this order flow, it will still continue to go down. So I'm expecting something like this, breaks here, gives you a reversal, maybe then we take our buys from there. That's the expectation. So right now, I will be waiting, doing nothing whilst I'm folding my hands outside there, right? So this is what I'm currently looking out for on step index. This is a medium zone. That's an extreme zone. That one at the bottom is also an extreme zone. So those are the three major zones that I'm anticipating or that I'm looking forward to on step index. So I hope it's clear. Is the setup clear? Is the analysis clear?
Yes, that's clear. Thank you.
Yeah, please. Thank you.
Yes.
Wonderful. So those that are really crying for entries, I think I've mentioned the things that I'm. So there are two kinds of entries. I think I've also spoken that we have what we call the aggressive entries. Aggressive entries is whereby you see a major zone like that. You enter, you put your stop loss below. Those ones are for people with stable accounts. If you know that your account is not stable, you can also wait for confirmation. Once you get that confirmation, then you jump in. Wonderful. So that is for step index. That is what we are looking forward for on step index. So here, if it leaves this demand or this order block, it will actually be an opportunity. After it changes there, you enter there, we go up until we reach the top. So you can actually hold this trade all the way to the top, all the way to the top there. You can actually hold this trade all the way to the top. Whereas once you get your entry below here, as it will be going up, as it will be creating new structure, new market structure, you will just be shifting your stop loss higher and higher and higher. Right? Anyone with a question based on what I've said, you can type your question in the chat box. Anyone with a question based on what I've just explained? Anyone with a question, you can type your question in the chat box there. Any question based on what I've just explained now? Any question? Right. So I think everything is clear here. So that's what I will be looking forward to. As I said, 15 minutes and 30 minutes. Those are my entry timeframes, not my analysis timeframes. Most of you get it wrong now by starting to analyze from there, because once you start to analyze from there, you don't have a clear picture of what is happening on the higher time frame. We don't even know that why are we anticipating for the market to come all the way there. You don't even know all of that. So that's a problem now when you just start to analyze from the middle of. Can you please explain liquidity once more? Explain liquidity. Liquidity is simply stop losses of retail traders. That is what you call liquidity. Liquidity is where your stop losses are as retail traders. Where you put your stop losses, that's where they call liquidity. That zone where you put the majority of your stop losses, they call that zone a liquidity zone. Your normal support and resistance, your what do you call this? There are so many forms of liquidity. Trend line liquidity. In this case, trend line liquidity will be above this trend line. That's where the stop losses will be. So them breaking that trend line already, they will be collecting that trend line liquidity. They would have collected it by breaking this trend line, because the stop losses of traders are above here. They would have taken out that liquidity. So liquidity, it's simply the stop losses of your fellow brothers and sisters. Even if you're a scalper, you must know what is happening on the higher time frame, right? You must have an idea. In as much, for example, if someone wants to scalp, right, they can come to the 15-minute like this and see what I'm seeing here, then go down to 5-minute, then also do a further analysis there. Then they can scalp, right? But you're scalping using higher time frame zones. You're scalping using higher time frame analysis. Because if you call yourself a scalper, yet you come to scalp from lower time frame analysis only. Because remember, lower time frame analysis only, if it doesn't have a higher time frame backup, it will easily be broken. So that's why it's so wise, even if you're a scalper, know what is going on the higher time frames. Know what is going on the high time frames. Once you know what is going on the high times, you scalp on the side of where these guys are pushing price. For example, let's say you're a scalper right now. This zone, you would have started scalping on that zone, right? You go to 5-minute, 1 minute, go get your confirmations. You would have started scalping from there, because that's a major zone. But the danger now of scalping on these minor zones that you might see along the way, you see they were being broken. So scalping is not a problem, but I always say, if ever you now want to start to really make good money out of trading, you need to rise from the level of being a scalper. Me personally, I see scalpers as people who are really scared. They're really scared of they're not so sure about their analysis. They're not so sure that the market will go all the way there. So they want to be in, out, in, out, in, out. It's like you're scared of something. So scalpers, I feel like they're just guys who are collecting a little chunk of. Why not take the huge chunk of the move? Why not take the huge chunk of the move? So yeah. So guys, I think this is the video. I think I'm done. I think I'm done for the sake of time now. For the sake of time, I think I'm done. It's almost to 8 now. So I think for the sake of time. So those ones who want to see the video, you find it on YouTube. You find this video on YouTube. If you refine this zone according to 15-minute, you discover that 15-minute there, it will be this one. You can even enter sniper entries from there. So once it manages to change character here on the lower time frame there, you know that pullback that we're anticipating is now happening now. Once we have successfully managed to change character there, know that our pullback is now happening. Once it happens, you can target that as your TP. Once your TP is hit, then you drop, you go down with it. Remember what I've always been telling you, the market what about with low capital? Which indices can you trade? Which indices can you trade with? No, it's not about which indices. It's about you knowing proper risk management and also focusing on, is there a possibility of bearish order flow? It's currently in bearish order flow. So when you say is there a possibility of bearish order flow, it's still in bearish order flow. This is still bearish order flow. So when you say is there a possibility of bearish order flow, I don't know what you're saying now. That one is saying what? I'm still going to do for the sake of time. No, I want to. I think maybe later tonight or early tomorrow morning, I'll do VIX 75 for the sake of time, because I now must go and meet these guys in the $1 million class. I now must go and meet them. Then after that, we'll see the TikTok live. From the TikTok live, then yeah, we'll see. But yeah, so far, so I said here, you enter after the shift. The shift there must happen. So if it doesn't happen, you'll see this market breaking this order block or this demand, using that as a breaker block. That's also another possible scenario. Use that as a breaker block, come all the way down nicely. It's also a possible scenario. Once you see that one, get confirmations, you can actually sell from that breaker block. Stop loss will be above, targeting this level. That's another possible scenario. So you're all about waiting, wait for the market to move, then you respond. Most of you want to be in, then you want the market to respond to you after you're in. No, that's not the proper way of doing it. You wait for the market to move, then you respond based on the market movement. Oh, yes, there is a possibility of a breaker block. It can actually use that. But if it doesn't break there, simply means it's going to do the opposite. Because remember, the market is not in any hurry like you. It's not even in any hurry. So them coming back all the way to mitigate the top there, they are simply showing you that we are not in any hurry like you. They are not in any hurry to push price down there, down here. They are not in any hurry. You are the only one in a hurry now. So guys, I think we are done. We are done. So make sure you go and see, if you want to rewatch, go and rewatch on YouTube there. See you on the TikTok live. They were going to analyze pairs that we haven't analyzed so far. That's why we're going to analyze the pairs that we haven't analyzed so far. Wonderful. So guys, see you. See you. Thanks, Michael. Wonderful. Fiona, wonderful. Right. So guys, this is the analysis. Those are the trade opportunities personal that I'm going to be taking. Just in case you think maybe I'm going to be taking anything else. No. What I've just explained now, once I see it happening, you'll find me in. So that's my lookout. That's my current setup. Someone asks you for a setup, just screenshot this and duplicate it on your chart and send them. Someone says, show me your chart. Yes. So this is my current setup on step index. Wonderful, wonderful, wonderful. See you in the TikTok live. Those that will be in the TikTok live.
Thank you, Michael.
Wonderful. Wonderful, wonderful, wonderful.
Yeah, thank you. Thank you very much, Dr. Michael. We'll see you on the TikTok.